Hello, everyone, and welcome to another edition of the Forex Technical Market Update for August 12th, 2015. Okay, what we see here in the euro, we see that the market is breaking above this downtrend line, and you can see the trend line was established in December, and the market second intersection, and the market has broken above this trend line. So are we in the clear when it comes to this reversal? And the answer is, in my opinion, not exactly. Because if you now we redraw the trend lines, and that's why it's important when you are doing technical analysis to always be looking at what the market is telling you. If you redraw the trend line, and we have another trend line, we see that the market is still in a triangular consolidation pattern. So that's exactly what is happening in the euro. Now, if we break above this trend line, above this consolidation, that will be fairly bullish. But we have to close above these 115 levels in the euro currency. So although we're seeing positive price action at this point in time, we're not out of the woods yet. And that's why it's inherently difficult to trade retracements. Trading retracements is one of really the hardest things that you can do. And when you're taking a trade that is counter to the prevailing trend. Now, taking a look at our pivot point numbers and our weekly pivot point numbers, we see that the market is currently trading above the weekly resistance, but it's also trading at the monthly R1 resistance. So we are going to look to see if this monthly R1 contains this market. Also notice that we have a swing high in this 111 region here. So we have a swing high and the monthly R1. So we're going to see if the market, if the sellers come in and basically push this market to the downside. The next area of resistance would clearly be at the downsloping trend line, and the monthly R2 conspicuously is at the 114.08 level. So we have a lot of resistance levels here in the euro currency that the market has to overcome. But we'll first see if it can overcome the monthly R1. If it does do that, then the monthly R2 would be in its sight. Okay, taking a look at the US dollar index, we see that I'm going to do just about the opposite analysis. We see that we're in a consolidation pattern, as you can see with the US dollar index. But let's take a look at the monthly numbers. Where do they line up? We're currently sitting at the weekly R3, and we're just above the monthly S1 in the US dollar index. Also notice that the monthly S2 coincides roughly with this upsloping trend line. So even if we break below this level, we could also find support in this monthly S2 region. Now, if the market trades below the monthly S2 and we do close below I would say this point near this 93 level, well, that's not a point, that's almost a highlighter. If we trade below this point here, that would be fairly bearish for the US dollar, because we'll have a break out of a triangle and a close below this swing low. That would to me initiate a greater dollar pullback in the dollar to retrace this large move that did occur last year, in the latter part of last year. Taking a look at the Japanese yen, what's happening? The market broke out of a consolidation pattern, as you can see, and the market is now coming down and retesting this triangle, as you can see here, and it coincides with the monthly S1 number. So with the Japanese yen, No, I'm not saying that just because it's retesting it, it will successfully. This area will act as support, and the market will magically go back up. I mean, this market can do anything, and as I have been pointing out with the Japanese yen, keep an eye on the S&P 500, because when we have massive sell-offs in the S&P 500, we see that the Japanese yen increases. So if we see that the S&P 500 slicing below its support, as you can see, this is a channel support area, or it's in a channel more accurately. If we see that the market closes below this channel, we could see further strengthening in the Japanese yen. Now, taking a look at the monthly numbers on the S&P 500, we see that we are currently the pivot point numbers. We are currently at trading near the monthly S1 in the S&P 500. So the monthly S1 coincides closely enough with these low points near the 2043 level in the S&P 500. So we could see some support at this level. And that's one of the ways we can analyze a market, and that's called intermarket analysis, where you are looking at different markets to get a picture of what is happening on the broader markets. So back to the Japanese yen, the market could test this area, and if we see strength in the stock market, we could see a turnaround and it head back up, or we could see further selling, and if we do close below the swing low in the 120 30 area or so, and we close below that, that will be fairly bearish for the USD versus the Japanese yen. Taking a look at the British pound, the market this morning is trading up to this resistance area, and this resistance area is actually proving very resilient with the British pound. We see that the market tested once, twice, 3 times, 4 times, 5 times. This was a minor attempt, and the market went down. It's now testing it again. So this area near this 157 region for the British pound is strong resistance, and if we do overcome it, we could see stop losses being fired off in this region, and we could quickly trade up to the 157.50 area if we do get especially a daily close above this area in the British pound. Canadian dollar pulling back also. We see that the market after, and let's just revisit the monthly chart with the Canadian dollar, because we're speaking about whether this could be a false breakout or the market could continue going upward. And as you can see, earlier in the month, the market looks like it was breaking out. Now it looks like it is pulling back. So that's why we have to wait until this monthly candle closes to get further insight as to what the direction would be in the Canadian dollar, because this is an area of significant resistance that we see the market every time it trades up to this area. We see the market pull back some degree. Okay, the final market is the gold market. We see that the market was able to trade above this minor channel that was occurring in gold. As you can see, this minor channel here, the market trade above 110 and is currently at 1123, and it looks like we're initiating a retracement in gold of this broader move to the downside. Okay, if you would like to have these signals, the trading signals, we're in interesting times in the markets now, where the markets want to reveal where the next trends are. If you'd like to take advantage of them, you can click on the link below this video. Yes, there will be bumps on the road. One thing I would like you to know with the signals, it's not something where your equity will be going straight up, straight up, straight up every month. There will be months where the equity curve would look like a chart. You'll have up, you'll have down, you'll have up and down. But the whole point is to be going in an upward direction. And that, my friends, is what we call real trading and not fantasy trading, where every week, every day, every week, every month, every year, you're up, 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 up. That's not the real world. Okay, so if you'd like to take advantage of the signals for long-term equity growth, you can click on the link below this video to get started. Thank you very much for listening, and I hope you have a wonderful day.